All right. Hello and welcome. David Kinder here, registered financial consultant and charter life underwriter, and your host of the Financial Advocacy Podcast with my co-host, Mike Moffitt. And yeah, we're starting a little bit early, but we've got a busy day. And quite frankly, it's already been a busy day. So I wanted to get this thing banged out here real quick. We got some things in recent headlines to kind of talk about. Let's bring up, since this is October 29th, we're only, a week away.
Just a couple days, man, from the election, right?
From the election, we are not far off from that. Thank goodness. We're looking forward to the drama being over, and seeing who's possibly going to win. I think the momentum is on Trump's side. I want to believe that, but then that could be my own bias and things just being reaffirmed to myself. So what do I know? So I'm not going to say I have any definitive idea of anything at all whatsoever. But Trump just announced this like the other day, and I thought this was really good because this is something I think that we should have in the tax code. Let me pull this up real quick.
A new policy today that I will support a tax credit for family caregivers who take care of a parent or a loved one. It's about time that they were recognized, right? They add so much to our country and are never spoken of, ever, but they're going to be spoken of now. Thank you all very much.
I think that's a really good idea. I mean, when we're looking at our total demographics and our aging population overall, we're going to have far more need of caregivers. And we're not talking about needing a nursing home or anything. We just need someone to be able to help with some of the things around the house. You know, what do we talk about? The activities of daily living, right? I don't know them all. Toileting, dressing, ambulating, transferring. I think it's the same thing. I don't know. But, managing your medications and things like that. There's all this stuff of managing your daily activities. And when you can actually have that tax credit, that just shows that the country's actually looking out for you in that way. Now, who knows how big that's going to be? No clue. But at least they're talking about it. So I can appreciate that direction overall. What are your thoughts on that, Mike?
Yeah, I think it's a good idea. I mean, that would certainly provide a lot of benefits, like you were mentioning, for people that are in those situations that could use that. Those things, especially if you have to take off of work or there's other situations going on. I mean, that stuff can get very expensive very quickly. And if you lost an income or, various other situations out there, I mean, providing some sort of help or relief to people in those situations would, of course, be vastly beneficial. And, that's where you can look at other types of plans, like long-term care type policies or other type things like that to help with some of that stuff. I know life insurance has some provisions for that depending on the policy and the riders you have on it. But, I think, right. So overall, I think it's a good, fair idea. Like you said, whether or not that actually ever gets implemented is another question altogether. Right, I agree. It's not a bad idea. It's something to at least look at.
And it's unfortunate that we're not hearing about any different ideas from the Democrat side. If there is, I'd love to hear it. I'd love to say, hey, at least Kamala came up with something. Well, hey, I haven't heard anything. And I know I've got my bias, but I wish they'd come up with something.
I mean, not to get too political, like I was saying, but it seems like just a lot of the ideas the Democrats have, they're stealing from Trump. At this point, right? So
right now, Trump has an open playbook, and they're just copying so far. And they're copying weeks late. I mean, come on, if you're going to copy, get on the ball. I mean, that's what I would be thinking of if I was trying to catch up. Okay, as you can tell, where my bias is on all of this right now. But putting all of that aside, let's talk about the other part that's very not political, but very polarizing. That's the word. Polarizing for the financial industry is Dave Ramsey. And I'm going to share it because this article came out, I guess, about a month ago. And if I could get rid of that pop-up ad, I'd be all set. But anyway, here, I'm just going to show it right here. Okay. Trying to hide the ad. Doesn't matter. The ad is fine. But it says here, Dave Ramsey encourages retirees to collect Social Security at 62. And there's 7 pros and cons. That's what this whole thing is talking about. So like, okay, Ramsey, I'm thinking, get out of your lane. This isn't your lane, but let's talk about it. So when deciding to claim Social Security can be challenging, it is one of the biggest decisions that most people don't necessarily do for their true ultimate benefit. So let's figure out where Dave is coming from, and then we're going to diffuse it. You won't get full benefits, true, and wait until your full retirement age. An FRA is an official Social Security term in when you could get to claim based on your birth date, birth year, and all that stuff. He says there are good reasons for some folks to claim benefits at 62, and that is true, but the headline said encourages retirees to collect Social Security. He didn't say some. He didn't put a cat. I mean, that's what the headline says. So I'm just going with that. Ramsey argues that investing early payments in high-performing mutual funds can provide a financial boon, providing extra wealth that can supplement your Social Security. You can tell how I think about this.
No, I have no idea.
No, not at all. You can't tell that I think that's such a stupid idea. There's and first of all, we can go back to an earlier episode where we talk about Dave's promise of earning the average of 12%. And of course, we completely described the fact that the mutual funds talk about did not earn 12% each and every year. You know, we talk about average versus actual. We beat that thing to death. But
We've
here's
already debunked all that. Yeah.
Yeah, we've debunked all that. And not that we can't revisit it, but I don't want to revisit it because we got another article later to talk about. But the thing is that every year you wait to claim your Social Security is an 8% increase each and every year. So here's the thing. If you look at your full retirement age, let's make it easy. Age 67. Each year that you decide to claim it early, you lose 8% per year. Or, and I don't know why this stuck in my head, 0.5% per month. It's just in my head. I got this from my studies 20 years ago, and it's never left me. It's a weird thing to keep in my head. But from your full retirement age through age 70, it will also increase by 8% per year. Now, it doesn't do that after age 70. There's no reason to necessarily wait after age 70 unless there's some reason you don't want the money. And as an American citizen, thank you. Well, this person to be a drain on it. I mean, we could appreciate that, but really for your own financial benefit, there's no reason to not claim past age 70. But really, I mean, and so here's the thing is that if you can guarantee a greater return on the money you get from Social Security to be greater than 8% each and every year, and you can tell that's just not going to happen. You cannot guarantee that. It's not possible. Yet Social Security will. By default, let alone cost of living adjustments within that. So there's all of that together. Plus the other part, and I don't think it covers this. I'll go through the difference because there's 8 different things here. We'll go through. Some of it makes sense. Some of it doesn't. The other part is the earnings test. For each year that you're claiming Social Security early, if you have other earnings, then $1 out of every 2 you're going to have to give back. It didn't say anything about the earnings test in here. So if you think, yeah, I'm going to claim it early so I can take the money and go invest it, but yet you're still earning well, you're going to be giving some of that money back. Now, granted, you're giving it back. It's going to be calculated in your future benefits. You're not really losing it, but you don't get it now. So that's a whole other thing that was not even discussed in this article. So let's go through this real quick because I want to diffuse this thing. So Social Security payments taken at 62 can, notice the emphasis, can offset the difference of waiting to full retirement age, which varies, but 67 is for all folks born after 60. You can stuff for that high-performing mutual fund. No, God, give me a break. Investing your account could grow enough to compensate for the reduced monthly benefits. Again, but you've locked in those payments early. The only way that they grow at that time is through the cost of living adjustment, which at a high inflation rate, which you're not going to enjoy because we've already had that, that will be a benefit for your Social Security, but it's not good for it's just so stupid if that's the only reason. Of course, the strategy comes with significant risk, particularly if you make poor investment choices or overall stock market underperformance for an extended period. Still, I would not recommend it. That's an ad. So what else has he got? You get your money faster. Well, yeah, that's the what is it that Tom Hegna calls it? Is that the Waffle House thinking? Better get your getting what you're getting's good. You know, I mean,
right?
Yeah, you can, but there's a significant cost on that. You can cash in if you're now. This part I agree with. If your health is poor and you don't necessarily expect to live long, go for it.
Right.
I have no problem with that. If your life expectancy is not expected to be a long time, claim it early. Might as well. Someone might as well get that money. You might as well, you pay it into the system. You might as well enjoy it for what you can. So that one I agree with. What's the next one? We got, you can quit your job early if you don't want to work or can't physically do so. Now, the can't physically do so, that's a health thing. So that part I agree with. If you are in a situation where you cannot keep working, then you claim your benefit. I agree with that. If you say, hey, I can't wait to get the hell out of this place, this is not exactly the best, what is it, FU money? I don't know if you heard that term, Mike, but, there's FU money. And with FU money, it's when you get to say, take this job and shove it where the sun don't shine. If you're in that spot, just get a different job or find something else you just might enjoy rather than making a decision you probably can't get out of. There are some ways to unravel it if you claim it early and you want to try to fix it. I think you only have 12 months from that time. It can be done. You have to pay all the money back, and then you can reclaim later. There are some things. I'm not an expert on all that. I just know there are some possibilities. There's another ad. Okay. You can use the money to get out of debt. Well, yes, debt is a problem. But don't forget the earnings test. If you're still working while you're collecting this, you're still going to be sending some of that money back. So it's not meant to be a get out of debt fund. The downsides of finally early. Let's see what they said. I forgot what they might make sense to start. But however, there's some drawbacks you need to be aware of. Yes, duh. Your monthly benefit will be smaller forever. Yes, we've talked about that. A lot of ads in this thing. Okay, cost of living adjustments will be smaller. That's because it's based on a smaller amount. So when your cost of living, let's suppose it went up 8%. You only get 8% of the $1,000 instead of 8% of $2,000 as a modest example there. You'll pay a temporary penalty if you continue to work. That's the earnings test. Okay, so they actually did mention that. Good for them. But they did not conflict. They should have put that together, realizing that if you're going to try to pay off your debt, they said, this is the catch. It's a combined decision. It has to be a coordinated advice situation. Not, oh, by the way, articles like this are nuts to me. So the bottom line, it has its advantages. And also, on average, Social Security only replaces about 40% retirement earnings. Filing early locks you permanently to lower benefits. Yes, we've talked about that. As option, it's smart to chat with a financial advisor to figure out the best option for financial situation, long-term goals. The best thing that this article did was bring out some awareness that there's some options out there, but you've got to make a coordinated decision. Because if I just looked at one of those and say, hey, let's do this, that sounds good. Well, that's not the smartest thing to do.
Dave Ramsey is not a financial advisor. He is a financial entertainer. So why he's giving advice like this in the first place? Well, that's beyond me, but who am I?
Well, here's the thing, and this is fun and not so fun, because the fact is that there is this thing called the First Amendment, and anybody can talk about anything they want. The problem is that this person cannot give advice and be held accountable for you taking your own actions based on what he's written, right? So if you read his article and you did it according to the article, and then you decide, you know what, that wasn't a good thing. You know what, he screwed me over. You can't sue him for your own actions based on the actions you took based on his writings. Same thing with my own stuff. I've got blog articles and stuff like that. If you're taking advice outside of the advice of a financial professional, there's no recourse for you. You did it. You might be able to get out of it. Depends on the situation. And that's the problem, is that we have to say it depends.
Yeah, well, there's never a cookie cutter, answer to that, if you can get out of it or not. It's so many variables that it would be impossible to know for each individual. But
yeah, it gets difficult. In fact, we should rename our podcast, called the It Depends podcast, right? I mean, anything particular.
It's basically caveat emptor, right? Buyer beware.
Essentially.
Yeah.
It's So it's good to that there's these articles out there, but don't expect to be able to sue anybody if an individual or consumer takes advice outside of professionals' guidance. So just nuts. Now, so that was the second one. That's the thing that came across my Android news, Google feed, whatever it was. This is a news article. Pretty sure, right? It did not say opinion. No, and this was about 2 weeks ago in Florida. All right, now, I'm not the Medicare guy. I'm licensed for it. I've never done CMS training. I don't know much of anything about this thing, but Mike, you're able to tear this thing apart because this former insurance, we are not talking about us. We did not write this article, but it says, I'm going to add this here to the stage here. Whoop, wrong tab. Let's share this tab instead. Here we go. Former insurance agent battling cancer has a dying wish, warns seniors against having a Medicare Advantage plan. Wow, that's a bold headline. Basically saying you're all screwed. And this is news. This is not an opinion piece. So, Mike, you told me you were going to tear this thing apart line by line, not limb from limb.
Limb from limb, line by line. I mean, there's not fair enough. I mean, this is egregious in the most absurd way that I can ever think of to publish an article like this. I don't know how CMS hasn't come after this agent or this newspaper, quite frankly. I mean, this is beyond the pale of the norm, basically, of what should be acceptable. Now, there's never, like we just said before, there's never a one-size-fits-all thing. Everybody should have a Medicare Advantage plan. Not everybody should have a Medicare supplement plan. But to say that, this is a scare tactic, if I've ever seen one in my entire life, this is really, really awful. This is bad. So, former insurance agent battling cancer has a dying wish. Like, my dying wish on my deathbed, warn people. It's so awful. To not have a Medicare Advantage plan. Now, it goes on to say more than 1.8 million Medicare Advantage members are enrolled in 2024 plans that will not be offered in 2025. Another scare tactic. I am here to tell you that if your plan is not offered in 2025, you have guaranteed issue in any other plan that you want. So they're not just ending your coverage and you're not going to be without insurance, right? Now, if you don't select a new plan, you will be automatically re-enrolled back in the Medicare Part A and B without coverage. But these insurance companies send out multiple letters. You have multiple opportunities to choose a new plan. They don't just suddenly drop you and leave you, for dead, basically, So, and even then, you still have other options and other ways to go about getting coverage. So the scare tactics are abundant here. And this is also illegal because this is what's called steering. You're going to see a lot of steering in this article, and you are not allowed to steer anybody towards a plan. You can give them the pros and the cons. You can say, here's how Medicare Advantage works. Here's how Medicare Supplement works. Which do you prefer, or which sounds better to you? And then whichever one they pick, that's the one you sign them up for. It's just that simple. You give them unbiased pros and cons of both, and then go from there. So let's get into.
So is it possible that CMS doesn't have an objection because it's not directly soliciting from the public? Could that be it?
I mean,
because this is a news article as opposed to a direct mailing piece or sales literature in the appointment. I'm just wondering.
It could be, but it's still steering and it's still fear mongering. So
yep.
I there's a lot.
Your dog is objecting to the whole thing right now as we speak. Your dog knows.
Right. Yeah. So I mean, there's a lot of stuff that goes on out there that I wish CMS would police more. But then again, CMS already way over polices a lot of things as it is. So this is the kind of stuff that I wish that they would police instead of worrying about if we gave if we were doing an educational event and we gave somebody a $5 gift card or not. I mean that kind of stuff is whatever. But anyway, so let's get into this thing. The Medicare open enrollment period began Tuesday, the 15th, and big changes are in store for Medicare Advantage patients in 2025. There's always changes in store every year. Nothing. No
surprises here. Yeah.
So it is a good time to review your plans and coverage now to avoid being caught by a surprise next year. No kidding. You think so? You think you should? Okay. Medicaid changes coming next year will impact thousands of seniors with higher out-of-pocket costs, higher prescription drug deductibles, and fewer supplemental benefits. Maybe. So let's kind of unpack that a little bit. So the drug deductibles are pretty much true. There are more deductibles on prescription drug plans, and that is because they have now capped your out-of-pocket costs to $2,000 for prescription drugs. So insurance companies, right, think about it like this. If they're going to absorb more of the risk, of course they're going to transfer some of that risk to you as the consumer. So they're not just going to simply, allow, there to be a max out-of-pocket huge decrease and then also getting rid, of the coverage gap as well. So they're not going to just absorb all this cost without transferring some of the cost back to the consumer. So this is true whether you have a Medicare Advantage plan or a Medicare supplement plan with a separate prescription drug plan. So all of these drug plans are affected by these changes. So this doesn't necessarily have anything to do with just Advantage plans. This affects everybody across the board. So demonizing Medicare Advantage plans for this is just beyond wild, first off, because all of these plans are affected by this. And there are some, no deductible plans out there. Typically, they're going to have a higher premium, though, right? Because the insurance company is going to make up for that with a higher premium. So you can get, drug plans without that deductible. It's just at a higher cost, right? So, and fewer supplemental benefits. I mean, those things change every year. Sometimes they'll offer hearing or dental or vision or this or that or gym membership or whatever. So, sure, some plans may or may not offer, certain things. They may change them from year to year as far as what they cover. That's, again, very normal.
But the more stuff that they throw in there, the more the price is going to be up. That's just the way it works. It's supply and demand. It's the bundle of everything. I still remember when Obamacare was first coming through, or the Unaffordable Care Act, we should call it, and they're talking about basically men have to pay for certain contraceptives. I'm like, well, what for? I mean, other than, I'm not getting graphic here, but other than certain ones that are easily available at the drugstore, what would be the point? What do we need to pay for? Just get them at the damn drugstore. Leave my insurance alone. But sometimes the law says you've got to have it thrown in there. We can't discriminate. And anyway, that's a whole nother topic.
All right.
Anyway,
so other than Fingers rant, let's move on here. So about, I don't know what. Okay. Anyway, so more than 1.8.
we're talking about bundling. That's what we're talking about. We're talking about bundling all this stuff and whether you're choosing it or not. And of course, the more that stuff that's bundled in, the higher the costs go. Just flat out. That's the way it works. Even if you don't want it.
All right. So more than 1.8 million Advantage members are enrolled in 2024 plans that will not be offered in 2025, according to an Oliver Wyman analysis. So we touched on that again, just more scare tactics to scare the public, right? Oh no, my plan's not going to be offered. What am I going to do? It's sad because so many, elderly people are going to panic because of that, because they don't understand this stuff and they don't understand, how all of this works. And that's why this is very sinister and very, very evil, this article, and it really upsets me. So Mike Harper has been in the insurance business, which he shouldn't have been, for more than 5 decades with Haskell Harper LLC in Atlantic Beach. Harper sends his clients a letter ahead of Medicare's open enrollment period, warning them not to sign up for a Medicare Advantage plan, which is often offered with a $0 monthly premium. If this isn't illegal, I don't know what is. You cannot do this. Is this not the definition of steering? I mean, come on, anybody that does AHIP and that does Medicare training every single year should know that this is illegal. You can't send stuff out like this, warning your clients not to sign up for a plan. This is just how he hasn't gotten in trouble, and how he's been doing this for so long is beyond me. But I mean, this is really, really bad. Anybody that, like I said, has done Medicare training knows that you can't do stuff like this. It's absurd. Anyway, let's go on.
Well, maybe they're giving him a pass because apparently he's dying. So, according to the headline.
I mean, I want them to know they have options. Well, that's not true. You don't want them to know that they have options because you only want them to sign up for a supplement plan. If you wanted them to have options, you'd provide an unbiased comparison between the two and let the client choose. I want them to be educated about these options and not get suckered sucked into the free medical, dental, vision, free, all of it's nice, free benefits, but what is it really worth? So again, more of the same. The letter also explains that Harper was abruptly taken a step back from work after a life-changing cancer diagnosis this summer. He's now in hospice care and has made his dying wish to warn seniors against having a Medicare Advantage plan. Those awful, evil Advantage plans. Warn.
So because the guy is dying, he's not afraid of anything. So therefore, let's go ahead and get his opinion out there. I mean,
well, the other interesting thing is in this article, and we can only assume, we can't know. But the other interesting thing is he doesn't tell anybody what plan he has. Oh. Let that sink in.
How convenient that is.
So just, I don't know, right? So maybe he has an Advantage plan. Maybe he took, one, maybe he has a supplement plan. I don't know. But this is all really interesting that he's warning people about the dire, things that are going to happen to them and how evil they are. Anyway, what I recommend to people is if they're looking for another option that's cost effective, go to a high deductible plan, high or G, depending upon when they were born, Harper said, right? So if you were born and you age into Medicare after 2020, you can no longer get a plan F. So anybody that aged in after 2020 has to get a plan G. Now, here's the thing. Yeah, sure, you can get a high deductible F or G, and the premium is going to be lower. The problem is that you're going to pay all of those costs until you meet that deductible, and the deductible can change every year, and the premium can go up every year. So while it may be a nice benefit, and maybe you don't need it now, right? Because you're reasonably healthy, you're 65, the 70s, somewhere in there, and your health is fine and whatever now. Well, okay, so your premiums are still going to go up, and the out-of-pocket expenses can still go up. So, and what happens, if they decide that, to his point, what if they decide to end high deductible G or F? Now, of course, you can keep your plan, but generally when they do that, they substantially raise the premiums on those plans because they try to kick people out of those plans, right? Because they don't want them in them anymore. So, his own scare tactics, he's not even using appropriately. But that's besides the point. At any rate, so you could.
Is there an appropriate way to use a scare tactic?
No, of course not, right?
Just making sure. Okay.
to his point, right? So you can get these things. The problem that I have is that, and this is especially true for lower income people, people that qualify for LIS, low income subsidy, that are on Medicare, Medicaid, if they can't afford to pay for their groceries and their rent, I don't care what the premium is. How are they going to afford to pay for that? And then let alone, the out-of-pocket deductibles that come with it if they should get hospitalized or need to use the services. So there's, again, for him to make this blanket recommendation that everybody should not be in a Medicare Advantage plans, or that lower income people should look at these high deductible plans is just nonsense. I mean, you have to sit down with the client and understand where they are, what their needs are, their health, all of the stuff. And then, you can recommend the plan that best suits them. And there's all kinds of other things that go into this that I mean, we could be here all day talking about this, really, with the amount of information we could go over. But just suffice it to say that that's not necessarily an option either. So the advice for seniors is to look through their ANOC, their annual notice of change, and learn what may be changing. Well, no kidding, Sherlock. This year, more than 16 million enrollees are in plans with no deductible for any drug. But in 2025, more than 45% of these members will be subject to a deductible for at least some drugs, right? We already touched on that and the reason why that's happening. So moving on. Harper is urging everyone to take open enrollment seriously. Everyone can change their coverages on their own by going to Medicare.gov and comparing their options. Absolutely. If you want to go to Medicare.gov and want to make your own changes, knock yourself out. That's perfectly fine. The problem, again, comes in to not everybody understands all of the nuances and consequences that come with changing these things. And that's where having a reputable local agent that knows what they're doing helps. And it doesn't cost you anything to have the agent. The agent is paid directly by the insurance company. and it doesn't change your plan premium or do anything like that. So I don't know, this guy was an agent. I don't know what his motive here is to tell everybody to go enroll on their own, but I certainly wouldn't encourage people to do that. You're more than welcome to. That's your choice. But again, caveat emptor. Buyer beware. If you go on there and you select your own coverage and you're not sure what you're doing, you may find yourself in a plan or a situation that wasn't as beneficial as what you could have been in had you used a reputable agent that knows what they're doing. So,
right.
He goes on to say, it's just that these plans are advertised without talking about the impacts and the downsides to it. They never talk about the fact that you get in the plan, you may not be able to get out of it. You have to go through underwriting if you're not happy with the fact that your doctor doesn't accept it, and it may be too late for you to make a change. Of course, Willow is upset about this too, because we have more half-truths and almost falsehoods here, right? So, sure, right? Depending on depending on the state that you live in, several states have guaranteed issue into a supplement plan on your like they have a birthday rule, for example, or some states actually a carrier in certain states will just have guaranteed issue into these plans. Now that if you're using a guaranteed issue, it may cost more to get into a supplement plan, right? But I mean, the fact that you may not be able to get out of it, again, that's just another scare tactic that makes people worry that they're going to be trapped in this thing and it could be the most awful situation for them. And that's just not the case. I mean, there's always usually workarounds, and I've seen situations where there's been even exceptions granted and stuff like that. So just to try to scare people into this is just totally beyond what this guy should be doing. And the fact that he was an agent is makes this even worse. This is just anyway. So those with Medicare Advantage plans must actively select new plans before December 7th, right? So the annual enrollment period or open enrollment period, whatever you want to call it, is October 15th to December 7th of every year, where you have the option to make your changes more specifically for your prescription drug and your Advantage plans. If they want to change, if no selection is made and your policy is no longer offered next year, you will be placed in traditional Medicare. Now, that is true. If your plan is no longer offered and you do not select a new plan, you will be placed on traditional Medicare. But I mean, what should this guy care? According to him, an Advantage plan is the absolute worst thing you could imagine. So being on original Medicare would certainly be better than the garbage Advantage plans, right? So I mean, what's the worst that could happen? But
the worst thing is that we got this article here, and apparently this lady Savannah, whatever her name is, I can't scroll now. Scrolling up here, so this is an interview of some kind, and so he's in hospice. He's not going to care. Even he might have died already. What the hell do I know? I'm just, he doesn't have to take a whole lot of accountability for what has been written here, because apparently he didn't write it. This is an interview news article, not necessarily directly from him, but he should have known better.
Yeah, I mean, this is the kind of stuff that really you see, and it really frustrates those of us who are trying to do things the right way and honestly. And he's absolutely right. A Medicare Advantage plan is not appropriate for everybody, but a Medicare supplement plan is not appropriate for everybody either. So for this guy to, go here and write this article that his dying wish would be that everybody gets off of a Medicare Advantage plan, I mean, come on now, let's be realistic here. I mean, certainly, if you have certain situations, a Medicare Advantage plan could be much more beneficial for you than a supplement plan. Certainly just the premium savings alone could be beneficial to somebody. So there's pros and cons to both. There's never, even like with anything that we do with term life insurance, with retirement income, with Medicare, with Social Security, taking your Social Security, there's never a cookie cutter answer to every situation. So for this guy to come out here and say that a Medicare Advantage plan is the worst thing ever and nobody should have one, I mean, that's just malpractice, first off. And second off, it's illegal because it's steering. And for him to send letters out to his clients to do that. That's one of the worst things that I've seen, and how he got away with that. I mean, that's one of those kind of things that kind of, goes under the table, that he could have been reported for, and maybe lost his ability to sell Medicare or his insurance license. I mean, that is literally the definition of steering. You cannot make it any more plain than that. Trying to scare somebody out of a plan to enroll in the plan that you want them to enroll in. I mean, that's pretty much textbook definition of steering. And if he's ever taken AHIP, this guy should know better. I mean, that's talked about over and over and over again on those certifications. But what do I know? At least it seems like most of these people never get caught, unfortunately. But it is what it is.
Yeah. Well, at the same time, part of me is glad we don't have an overarching government or insurance division or CMS to crack down on every single little thing. Otherwise, we might not get anything done. But at the same time, yeah, I don't like misrepresentations to the public. I don't like, I mean, there's some things that are blatant out there, and I wish that would stop. But the problem is that we're largely a self-regulated industry until a consumer is harmed. Once the consumer is harmed, then everybody comes in to say, okay, we rescued that person from this evil person. Where were they in the beginning?
Yeah, and that's a lot of what happened with Medicare, right? Because there's all of these things. So then that's part of the thing too. So when you get your insurance license, when you get your life and health license, specifically your life health license for Medicare, you can sell Medicare supplement plans without any additional, training or certifications. In order to sell an Advantage plan, you have to recertify every year for AHIP, and you have to pass, AHIP, and you have to pass carrier certifications. So anybody can sell you a supplement plan, and then they can tell you to just go to Medicare.gov and pick up your prescription drug plan, because to be honest, they don't pay anything. So agents don't want to deal with that anyway. So, I mean, that's the thing. Like, why do these people that are med sup only, do they not want to have to deal with the certifications and stuff? Who knows? I mean, it's just, the point here is that this was a blatant definition of steering. And I think that there's a lot of things that we can do better as agents overall for the consumer than writing silly articles like this. I mean, if you're going to warn the public, that's fine, and that's your opinion. You're welcome to your opinion. It's your opinion. It may not be somebody else's. But to put out something like this, a hit piece against something that is beneficial to a lot of people, is kind of, and it's, I don't know, released in Florida where a lot of people retire. So now, you got this guy's trying to scare a lot of people out of a plan that could be very excellent and beneficial to them. And now they're going to maybe hurt themselves financially because they're going to be scared out of a plan that really was good for them into paying a premium that they can't afford, maybe costing them their food or their home or something. Who knows? I mean, that's the really sinister and awful part of all of this.
Yeah, and there's a lot of that stuff that goes on, and a lot of it's under the name of free speech, but there has to be responsibility and accountability with some of the, especially when you're talking about licensed services like insurance, like Medicare Advantage, Medicare supplements, all that stuff. And so, yeah, that was a misleading article. That the good news is that we get to talking about them. I wonder if any regulators watch our podcast, because you can tell our goal is to.
That would be interesting. I mean, they're probably right. I mean, the guy's on hospice. What are they going to do to him at this point? But
really. I mean, but anyway, you never know who's going to watch it and who's going to find out about something. We do know where I found that link was on insurance forums, and I do know that company compliance departments and regulators do visit that site. So who knows what might happen because of things that get posted there. I've never seen anything directly, but I have seen the what is it? The DNS reports, for lack of a better term. I don't even know what it is, but we know that there's big companies that check out that site to see what's being talked about. They're probably looking more for their own brand image, but regulators will visit on there just to see what's being discussed. So who knows? But as our goal here as a podcast, my goal professionally is to help elevate our entire industry. But it takes the individual practitioner to want to be better, to serve at the highest ethical manner, to help people make the best decisions for them. So we'll call some of this stuff out in the effort for the consumer to understand, here's what's going on, here's what's correct, here's what's not correct, like I just did with Ramsey, right? The guy, and some of these best articles that are persuasive, but they weave in these half-truths in them. So it sounds good. Should I listen to the other stuff that doesn't sound quite right? What's the deal? And when we could bring that clarity in, that much the better. That's what I like trying to do. But I really wish the rest of our industry would rise up and hold ourselves up to a better standard. Because if we don't, government's going to try to do it. And when they try to do it, they impose far more, not just more regulations, but jail time and fines and all that stuff when stuff isn't followed. And
Yeah,
I'm not in favor of that.
I mean, we as licensed insurance professionals, I mean, why can't we hold ourselves to a standard where we kind of police ourselves? I mean, let's think about this for a second. If you're sitting with somebody and you're trying to sell them a product, pretend like they're your grandparents or they're your mom and dad. How would you want that person to be treated, right? So instead of trying to take advantage of somebody or to steer them in the wrong way or to do things, I mean, because they're somebody's parents or somebody's grandparents, they're somebody's kids, stuff like that. So why, just because you're not related to them or you don't know them, why would you treat somebody badly? Imagine how angry you would be if you found out that an agent did something to your parents or grandparents or kids, right? I mean, just put yourself in that person's situation. And then we don't need all of this policing and, oversight from CMS and the government and all of this stuff. I mean, a lot of the CMS stuff is because of call centers and other agents coming in behind each other and doing other stuff. And, if people are just, as agents, why can't we just act in the client's best interest always and be honest with people? I don't understand. Is your commission really worth that? I mean, what even on a brand new agent or whatever on a Medicare policy, what are you gonna make? $400-500 maybe, something like that? Is that worth it to screw over somebody's grandma? I mean, seriously, I don't know. It's just infuriating.
Well, it's definitely I wasn't thinking about Medicare. I was thinking about annuities and life insurance and all the other stuff. Even bigger impacts on someone's wealth and inheritance and things like that.
Right.
And look, I was raised as a Boy Scout. Do unto others, you want people to do unto you, and I want people to be better off having worked with me than without. In Boy Scouts, they call it leave no trace, which is basically, wherever you were at in camping, is what it should look like you were never there, or ideally you make it better than when you arrived there in the first place.
Mm-hmm.
I live by that. I like Zig Ziglar. You can have everything in life you want if you help enough other people get what they want, and that only happens the right way, naturally, if you help them actually be better off. Not just because I got them a policy, but because I actually made them better off by the properties of whatever it is that we're trying to do for them. So that's just what I'm all about. It's part of my DNA. It's part of my personal code, more or less. People have got to be better off. And if I'm not sure if they're going to be better off, I'll present the options. I'll say, I'm not even sure you even want to go down this route, but I want to show you what's possible, and then let them decide. And then if there's something that I can't make it any better. Like I had another thread in the same forum. Someone came on and said, we've got an annuity of about $320,000 worth of value. It's paying out to them. I think they said it was like $25,000 a year, but they've had it for a long time. And that's the guaranteed income for the rest of their life. And their advisor is trying to talk them about replacing it, putting it into mutual funds for the lower cost structure. I'm like, I'm sorry, your mutual funds are not going to pay out that income for the rest of your life. There's things that are more important than cost at that point. So you never know, but it's just like that advice. I even put it in there. So you might want to check on that advisor, look at their regulatory background just to see if there's anybody else complaining, because that does not sound like a suitable recommendation at all at any level whatsoever. And I was rather emphatic about that. So, and this was to a 77-year-old, according to the thread. I'm like, why are people doing this? And the only thing I can think of is they want to, and I'm going to use the term properly, they want to churn their book of business. And by doing so, they can increase their commissions and whatever else. But I've got to make sure, is the client really going to be better off? If the client's not going to be better off, don't recommend it.
Right. I mean, there's nothing wrong with issuing new business on an existing client and making another commission if it is in the client's best interest.
Yeah.
There's nothing wrong with that, right? But just doing it, as you said, to churn business, to write new business, that is a problem, right? So we shouldn't be doing that. But honestly, if there's a product out there or something that you can put somebody in that is going to be beneficial for them, where you can make a new commission on it, and it makes sense for the client and they'll be better off for it, go for it. I mean, you deserve, as an agent, you deserve to be paid for that, and you deserve to be paid what you're worth. And,
Yes.
I think that the client shouldn't have any problem with that, right? Because you help put them in a better situation. And there's a big difference there between putting a client in a better situation and earning a commission, rather than just putting a client in something new because you're going to make a commission, whether it benefits them or not.
Right. One's about me, the other one's about them. And
Right.
really, the best recommendations are all about what's in it for them. And, now if the client situation changed, if they didn't need that income anymore, and they'd rather have that money be passed on to someone else, hey, put that into something else instead of the annuity. Their objectives changed, or they have other income that they're drawing from. Therefore, this money isn't being used that way. So now, because of life changes, now you can make a different recommendation that could make better sense. Anything's possible. Or, hey, use that income, you buy another policy and you do it that way. There's so many different ways to do things. It's annoying when I see it and realizing that some people just are not looking out for the client. At least according to, let's put this asterisk on there, at least according to the post that I read. Because it's according to the client's perspective, right? I don't have the advisor saying, I'm recommending to this client because their situation changed. No, we didn't get that. We got the client saying this. That's all we have to go by. But it still looked fishy as heck. So, unfortunately, and we're not, and by the way, Mike and I are not saying that we're the only ones that do it right. No. There's lots of great advisors and great insurance agents out there. I'm just always concerned about all this bloviating stuff out there that is designed to be sensational.
Yeah.
That, bending the truth and things to, like you said, steering, which is to me a Medicare mainly term, but yeah, to tell people exactly what they should do rather than figuring out what is really best for them.
Yeah. And I guess, just to piggyback on that, if you're going to make a decision like something like this, talk to more than maybe one agent, or ask a friend or family member even, or somebody that that is at least somewhat versed on this stuff, to make sure, if you're unsure, that this is actually to your benefit, right? I mean, you never have to sign a contract. Nobody's going to force you to do it, right? In essence, you have to pick a Medicare plan at some point, but talking to another agent, or looking at another plan, or talking to somebody that have your interest in mind over somebody else, that's not going to hurt, right? So don't just pick something because you feel pressured. There's always, unless it's December 7th and you have to pick a plan and you don't have any choice. But I mean, that's your own fault, right? I mean, take care of the stuff before December 7th at 10:30 at night. I mean, that's
self-imposed pressure. That's the pressure of delay, the pressure of procrastination. And whose fault is that? That ain't our fault. That was not of our making. That was your fault.
At that point, you might be stuck with what you got, and there's nothing we can do to help. Yeah. So, but I mean, in reality, nobody's going to force you to do anything. So talk to a couple different people. Make sure that you're comfortable with whatever you're purchasing, whether it's life insurance, Medicare, annuities, investments, whatever it is out there. I mean, there's never a one size fits all thing for everybody. So don't feel like you have to purchase or whatever that person is offering you in that moment. That's not necessarily the wisest thing to do.
Right. Yeah, and a confused mind should not be making decisions. It should become as clear as possible. And if you need help from a family member, get a family member to help you make those decisions, just to make sure. So and I think we'll leave it at that. Well, that was longer than I anticipated, but we're always longer than I anticipate these days. So go figure. I guess we'll just leave it at that. Everybody who's watching, listening, hit the like, comment, share, subscribe. Do the things. And we will catch you at our next one.